Let's bring in Tim Evans now from Longleaf Trading Group. He joins us live from the CME in Chicago. Tim, hello to you. Great to have you with us. Let's start talking oil, of course, around that $50 per barrel level. We've got a lot of moving parts here, but let's just talk firstly about the price action.
Hey, nice to be with you today as well, Natalie. Yeah, I mean, I'd say the price action that we're seeing is pretty encouraging. You know, we're working through some decent technical levels now. You know, this $50 level, obviously, from a psychological standpoint, as well as just a chart technical standpoint, you know, has served psychologically as pretty good resistance in most traders' minds, and we've been able to work through that level here as we're going into the close today. So, I mean, the bulls really hung in well. After we saw a little bit of negative movement early on today, but you know, we closed with strength. So the bulls are definitely going home with the upper hand headed into the overnight session tonight.
It's interesting because, of course, we have seen a bit of a move when it comes towards those safe haven assets. The likes of gold was higher off the back of geopolitical tensions, particularly North Korea. But we've also been looking to what has been labeled that sham election in Venezuela. And we did have reports coming through this morning. The U.S. government has flagged that no oil-related sanctions will be included in the announcement when it comes to sanctions for the Venezuelan president for what the U.S. government has labeled as being undermining democracy, but measures will remain under consideration. That's according to congressional sources coming through. When it comes to oil-related sanctions, I mean, what are the ramifications of this?
Well, yeah, first off, I would say the price action day kind of reflect what you were talking about. I mean, there was initially concern that, you know, potentially devastating sanctions would be levied against Venezuela, which could have a significant impact on global crude oil prices, but especially here in the United States. You know, as the news broke that wouldn't be included initially, we saw a little bit of weakness, but we got all that back in a hurry. You know, obviously, you know, it's subject to change, and this is a very fluid, dynamic situation. So, you know, I'd say if violence continues, you know, as we saw or have seen here early on with this situation, you know, I think you can expect a much more aggressive action by the Trump administration. But yeah, I mean, it could have a big impact fundamentally on crude. I mean, the United States imports a lot of heavy crude from Venezuela. You know, part of, you know, what we discussed last week with respect to that meeting with OPEC and non-OPEC members was that, you know, Saudi Arabia was going to be cutting back its amount of exports to the U.S., which included heavy crude. You know, so that could potentially leave a deficit of heavy crude here in the United States. And the U.S. inventory levels have really been kind of driving prices for WTI. So, you know, if we find that deficit, this market, you know, could move higher very quickly.
Also, in terms of when it comes to that China data that we did have coming through yesterday, the manufacturing activity, we saw a surge overnight in terms of iron ore futures, although spot markets had slightly more of a choppy session. But that China outlook, of course, continues to be a real key focus when it comes to the broader commodity space right now.
Yes, indeed it is. You know, when we look around the world, you know, globally, and you know, you kind of have to ask, you know, where is, you know, an increase in demand ultimately going to come from? You know, I mean, there's pretty, you know, stale, if you will, estimates in terms of GDP out of the United States. You know, Europe, most projections are, you know, they're not aggressive in terms of growth. So, I mean, Asia is going to have to be where a lot of that growth comes from, and primarily, you know, coming out of China and India. You know, so we saw in the first half of 2016 that the Chinese, you know, obviously imported a lot of oil, you know, I think up 13% relative to what they imported the first half of 2016. You know, so the market is definitely going to be looking for that, you know, demand growth to continue to come out of China again, as well as India. So, you know, all information relating to, you know, the economic health of China is going to be critically important to near and intermediate term prices in crude oil.
Absolutely. So how are you trading this at the moment then?
I mean, it's been a bit tough here as we're moving, you know, and really trying to discover new price levels if that's ultimately going to be the case. You know, I mean, the one thing we have definitely seen is, you know, as last week as the market rallied and we continued that rally today, is that the oil VIX levels have increased. So that leaves option volatility as a potentially lucrative investment strategy or investment vehicle one could use, and at Longleaf, that's ultimately what we're using. Because our view is, even these more bullish fundamental factors are coming into the market, and the market's ultimately having to reprice it. I don't think the market's going to have enough confidence to take out $54, $55 a barrel in the near intermediate term. So as we're getting above 50 and these volatility levels are increasing, at Longleaf, we believe collecting premium against the $55, $66 strikes are going to be the way to go, because we don't believe that we're going to be taking out those levels over the next quarter.
Of course, and is that, of course, we've spoken to a lot of the macro events and some of the geopolitical tensions that we're looking to, but of course, it's crucial not to, I guess, undermine the role that the weak US dollar is playing right now.
No, and that's really been a key driver. We've seen a lot of other markets, really benefit from that. I know you and I talk gold, relatively often, and, gold, we touched down at $1,200 and we're back north of $1,270. And that's primarily based on, the weakness in the US dollar, because all international commodities are dollar denominated. So all else being equal, if the value of the dollar falls, that market priced in those dollars goes higher. And that relationship is definitely in play here in crude oil. But, I'd say the fundamentals as it relates to the United States, we have, another failure by the U.S. Congress to, pass the Obamacare repeal, and that leaves many analysts and traders, including myself, very skeptical and very pessimistic, really about what the Trump administration is really ultimately going to be able to get through. Obamacare ended up being, or the repeal of Obamacare ended up being a disaster, and all bets are off, really, in my mind, relating to what kind of success they're ultimately going to have with respect to tax reform. I know the aggressive way that they were going to go about tax reform, they've had to peel back a lot of those ideas and really look more at just a basic tax cut. Obviously, those details are going to come into play here, but the optimism that the Trump administration is going to be able to get through meaningful legislation through Congress is what underpinned the dollar. So the dollar is really just peeling back all that optimism that came into the market going back to last November. So unless they get something done, the dollar is not going to have a whole lot of strength to rally off of and get back to 95, 96, 97 handle in the U.S. dollar index.
Absolutely, certainly one of the things that we are continuing to watch when it comes to the local session ahead. On that note, we will have to leave it there. Great to have you with us this morning, Tim. Thank you.
Thanks as always, Natalie.